What if I told you that the way a bank treats you has almost nothing to do with your personality, your work ethic, or even how smart you are with money, and everything to do with how much money you have? At $0, you're a liability. At 1 million, you're a client. At 10 million, you're a relationship. And at 25 million, you're the product. In this video, I'm breaking down exactly how banks treat you at every level of wealth, from $0 all the way up to $25 million. And more importantly, how you can use this knowledge to move up faster and start playing the game the way it's actually designed. Because once you see how this system really works, you'll never look at banks the same way again. At the lowest level, banks are not trying to help you build wealth. They are trying to make money off you, consistently and predictably. If you have little to no money, the bank sees you as a high-risk, low-value customer who requires management, not opportunity. You'll deal with things like overdraft fees, monthly account fees, minimum balance penalties, and extremely high interest rates on credit cards. Every mistake costs you. Every slip-up becomes revenue for the bank. You're essentially paying the bank just to participate in the financial system. And if you think about it, that's backwards. The less money you have, the more you pay to access money. This is why so many people at this level feel stuck, because the system is designed to extract, not empower. Banks aren't incentivized to help you grow when your balances are small. You're not bringing in meaningful deposits, and you're not borrowing large amounts that generate significant interest income. So instead of offering you leverage or strategy, they sell you convenience, basic checking accounts, debit cards, maybe a secured credit card if you qualify. That's the entire ecosystem. No one is advising you. No one is structuring anything for you. No one is helping you think bigger. It's all transactional. At this stage, the bank is extracting value from you, not creating it. Once you move into the $10K to $100K range, things begin to shift, but only slightly. Now the bank starts to recognize you as someone worth keeping around. You may start seeing fee waivers, basic credit products, pre-approved offers, and slightly better customer service when you walk into a branch. But here's the key distinction. You're still not getting the best deals. You're just getting more access. This is where a lot of people get comfortable and stop pushing forward. They think having savings and a decent credit score means they've made it financially. But from the bank's perspective, you're still in the retail tier. Everything is standardized. Everything is automated. Everything is based on rigid criteria. There's no customization, no flexibility, and no real relationship. You apply online, your data gets run through an algorithm, and you either get approved or denied. There's no conversation. Even when you try to invest in real estate at this level, you'll feel the limitations. Banks will strictly evaluate your income, your debt-to-income ratio, and your employment history. If you don't fit neatly into their box, the answer is no. So, while it feels like progress, you're still operating within a system you don't control. You now have access to financial tools, but you still don't have leverage or influence. Once you cross into six figures, especially in liquid assets, the entire dynamic begins to change. Now you're no longer just another account. You're someone the bank can actually work with and potentially grow with. You become what's known as bankable. This is when you'll notice easier loan approvals, higher credit limits, more flexible underwriting, and invitations into preferred or relationship-based programs. You may even get assigned a banker who you can call directly. That alone is a big shift, because now there's a human element involved. Behind the scenes, banks are starting to value your deposits more seriously. Deposits are the foundation of how banks generate profit. They use your money to lend out more money. So when you're holding $100K, $250K, or $500K, you become useful to their system. And once you're useful, the rules start to bend slightly in your favor. A borderline deal might get approved. A rate might get discounted just enough to matter. A timeline might get expedited, but you're still not at the top. You're moving from being ignored to being considered. And this is the level where smart investors start making major moves. This is where people begin house hacking, buying their first or second rental properties, using DSCR loans to qualify based on cash flow instead of income, and building business credit profiles. Because now, banks are more willing to engage. You're finally bankable, but you're not yet powerful. Once you cross the $1 million mark, everything changes in a very real and noticeable way. This is where you enter private banking, and the difference is dramatic. Now you're assigned a dedicated relationship manager who understands your full financial picture. You get customized lending solutions, faster approvals, lower interest rates, and priority service across the board. You're no longer dealing with systems. You're dealing with decision makers, and decision makers can create flexibility. At this level, banks stop asking, "Do you qualify?" and start asking, "How can we structure this to work?" That shift alone opens up a completely different world. Instead of being judged purely on formulas, you're evaluated based on your overall financial strength, your assets, your track record, and your potential. If you want to acquire a $1.5M or $2M investment property, even if the deal is unconventional, a private banker can help structure it creatively. They might use asset-based lending, offer interest-only payment periods to improve cash flow, or cross-collateralize existing properties to reduce risk. Relationships now matter. If you install a 2M sitting with a bank, they are highly motivated to keep you happy and keep your assets under their management. And here's something most people don't realize. At this level, everything becomes negotiable. Interest rates, fees, loan terms, timelines, nothing is truly fixed anymore. You now have influence, and banks start competing for your business. At $5 million and above, you enter a tier that most people never reach. You're no longer just a client. You're a high-value relationship with long-term revenue potential. Banks see you as someone who can generate significant deposits, large loans, referrals to other high-net-worth individuals, and consistent business over time. So they invest in you. You'll experience white-glove service, direct access to senior decision-makers, highly customized financing structures, and invitations to exclusive investment opportunities that are not publicly available. This is where off-market real estate deals, specialized lending programs, and portfolio-based financing really start to open up. And more importantly, your ability to leverage your existing assets expands significantly. If you have $5M in assets, it's not uncommon for a bank to extend you a $10M or even larger line of credit. Because at this level, they trust your financial stability and your ability to manage risk. Risk is no longer viewed in isolation. It's viewed in the context of your overall value as a client. And that changes everything. You're no longer reacting to opportunities. You're creating them. You're now playing offense, using the bank as a strategic tool to scale faster. Once you reach the $10M to $25M range, you are operating in elite territory. Banks start treating you less like an individual and more like an institution. You're not just wealthy. You're influential within their ecosystem. You now have access to senior bankers, fully customized lending strategies, ultra-competitive interest rates, concierge-level service, and exclusive investment vehicles that most people never even hear about. At this level, banks are actively competing for your business. Multiple institutions may approach you with different offers, better structures, and unique opportunities, all trying to win your assets and your loyalty. You get to choose who you work with. This is also where you start seeing access to syndicated deals, private placements, structured finance products, and institutional-grade real estate opportunities. Banks will proactively bring you deals. They will help you grow, not out of generosity, but because your growth directly increases their profitability. And here's one of the most powerful advantages. At this level, you can often borrow money at rates that are lower than inflation, which means you're effectively using money that is losing value to acquire assets that are gaining value. That spread is where real wealth is built. This is how high net worth individuals scale so quickly. They don't rely on saving. They rely on leverage, relationships, and access to capital. You are now a priority client, and banks are working for you. Now that you understand how this system operates at every level, the real question becomes, how do you move up? Because this isn't just about making more money. It's about positioning yourself correctly within the system. First, focus on building liquidity. Banks value liquid assets because they provide flexibility and security. The more liquidity you have, the more options you unlock. Second, start building relationships early. Don't wait until you're wealthy to connect with bankers. Develop those relationships now so they grow with you. Third, Use leverage strategically. Real estate is one of the most effective ways to climb these tiers because it allows you to control large assets with relatively small amounts of capital. Fourth, consolidate your assets. When you spread money across too many institutions, you dilute your importance. When you concentrate assets, you increase your leverage and negotiating power. And finally, think like a bank. Focus on risk management, stability, and profitability. When you align your strategy with how banks think, everything becomes easier. At the end of the day, banks don't treat everyone equally, and they're not designed to. They are businesses optimized for profit. But once you understand how they operate, you can stop working against the system and start using it to your advantage. If you want to learn how to position yourself for better loans, better rates, and better opportunities, especially using strategies like DSCR loans and real estate investing, make sure you subscribe, because that's exactly what this channel is built for.